tell us a little bit about how you got into trading slash investing?
Okay. My name is Ryan Williams, owner and founder of Lion's Heart Trading. And just a little bit of how I got started with investing and trading was at a very young age, it was kind of ingrained in me. I had a conversation along with a few other students with a teacher at the time, Mr. Lucenti, in the 8th grade. And right before we went off into high school, something he said that resonated with me that I'll never forget was that if you wanted to be rich in the United States, you had to do one of two things at the time, and that was real estate or the stock market. So that was kind of what was left with me as I was going on into high school. And then I went on to high school and went through the regular curriculum, and then went into finance at St. Joseph University in Philadelphia. And that's where I pretty much got the mainstream exposure when it comes to the stock market, and learning how it works with something on the campus, the stock market game. And then I had a professor that told me, I ended up being one of the top 3 investors on the campus for the year. And he mentioned, he said, if you continue this, you'll be a millionaire by the age of 40 because you know what you're doing. And that pretty much gave me the kind of segue that I needed to really understand, like, I need to really get more involved in trading and investing. And here I am today, right? I'm teaching others how to invest and trade appropriately on the ever-changing market.
Wow, so you spent some time in Philadelphia?
Yes, I did.
Wonderful. What school did you go for college?
St. Joseph University.
Middle school was where?
Middle school was here in Brooklyn, Bishop Ford High School. And then my elementary school was just up the road, Holy Family.
Oh, so you're one of those students after you pass, you just go out of state to college. Oh, okay.
I had the opportunity, so I decided to do it. I changed the venue. Went to the city of brotherly love,
Good. And you always wanted to be an investor?
Well, at first, funny enough, going into college, I always wanted to be a pediatrician at first. And then, because I love children, right? I don't have any children of my own, but I love children. But then, but my focus always going into school was, let me do my first semester in biology and take that path of being a doctor, and then take my second semester in finance. And once I found finance, I never looked back. I never looked back at being a doctor because I love making money so much.
So is there a difference between investing and trading?
Most definitely. It really comes down to a paradigm shift when it comes to your mindset, right? When you're looking to invest, you're looking to hold a stock for many months, or more than 5 or 6 or 10 years, whatever your time horizon is, right? Because you genuinely believe in what the company does, you believe in what their mission is, so you're trying to invest in them and hold them on for a long period of time. Where in comparison with trading, you don't necessarily need to know what's going on with that company. You just know that you might want to hold anywhere from a few seconds to weeks to maybe a few months just to make your money on it, to make your income on it. So you don't necessarily need to know what's going on fundamentally with the company in order to be a trader. But an investor, you most definitely it helps to want to know what they're doing and what their mission is, so that it kind of aligns with your values, and then you take a position in order to invest in them and make money.
So if I understand you correctly, in layman's term, a trader is more or less somebody who's doing it professionally to make a daily income or a weekly income, versus an investor is more long term.
Most definitely, that's a correct way of thinking.
I think one of the biggest misconceptions that prevent many people from getting into trading is because they think it's gambling, right? Are they right to think so?
I mean, it really comes down to your perspective of how you do things, right? A lot of the times that the comparison that is made is the casino industry, right? When you walk into the casino, there's the house and the people that's walking into the casino to spend their money, right? The casino, however, has done their research, right? They've done their statistics, they've done their probability that if this many people walk through the door, we know that this many people would leave money, and this maybe they might take some money away from us, but the gain is that they'll win more times than they lose, compared to the people walking into the door who may be just doing it for fun, didn't necessarily study the games and how it operates. They're just looking to make fast money. So yes, it's gambling to a certain extent, but there's a difference between being educated about the industry that you're in and not being educated about the industry you're in. Once you're educated, what can you do? You can make educated guesses, educated trades in order to higher probability chance of you making money, and if you're not, to risk management compared to the other side of things.
Right. For listeners out there, a lot of people who are not familiar with the stock market trading, so to speak, they always hear like different terms floating around. One of them is stock. Can you tell us what is a stock?
I love that question because I believe that a lot of people have a misconception of how much money you could actually make when it comes to equities or stock, right? By definition, a stock is fundamentally owning a fractional share of a company, whatever that be, Apple, Microsoft, or Netflix, and you essentially share in the overall profits of that company as it appreciates in value.
What would be your recommendation for people with limited budgets who have a strong desire to get into the stock market?
I always recommend individuals with limited budgets, first and foremost, before you even think about touching the market, invest in yourself. There's many things, a lot of things that we do in this life. If you want to be a doctor, if you want to be a lawyer, you go through the appropriate education in order to be great at what you're doing. Right? It's no different when it comes to your money. It should be even more serious because this is how you make your money. This is your way of life. You work hard for your money. You want to make sure that you got the right game plan down first and foremost before you even think about throwing it in the market. Because I'm going to tell you what's going to happen. If you don't take the path of education, the market is going to take your money, and you're not going to know why it took your money. At least when you get an education, you know, all right, these are the reasons why I messed up here. These are the reasons why it didn't work out. Now you can seek to improve on what you've done and then become more proficient as you go along.
What do you mean by market? What is the market?
Market as in whatever product that you're trading. If you're talking about Apple, putting money into Apple in and out, or if you're talking about the S&P 500, that's what I mean by market.
What is a share? And state at least 3 strategies young investors should follow when picking a stock.
So a share is essentially a stock, right? Is the ownership in the product of whatever you're investing in. And a lot of the times, young investors, when they're talking about strategies, the 3 strategies that I usually give them when they're talking about investing is, one, first and foremost, is it a household name? A lot of people believe that investing has to be this difficult task. You got to know what. A lot of times you know what to invest in, right? If you're in your home, if your mother is 75 years old and she's 75 years old and she's mentioning Zoom, chances are you should be looking at, and she doesn't use Zoom at all, chances are you should be looking at Zoom to invest in, right? Because a lot of the things, if you think about all the products, if you're not familiar with the market, but you're familiar with the company and what they do, Microsoft, Apple, Netflix, they're all household name before they went on a monster run in the last few years. So first thing is first is it a household name? Second, you want to know, is it an industry that you're familiar with, right? You want to be familiar. You want to know what's going on in that company in terms of what they're about. If you're into EV or electrical vehicles, what do? You say you go to Tesla, you know how their components work, you know where their growth can come from. So that's all part of understanding it as well. And the third part of investing is you kind of want to dig through their financials. You want to dig through their fundamentals, go over their cash flow. One of the major things that you'll realize when it comes to cash flow and the companies that have grown at a substantial rate over the past few years has become because of year over year cash flow that is doubling, right? If they've been negative, that's all right. Are they making the right steps in order to go from negative to positive and then go on track in order to double their income on a year, their cash flow on a year, their bottom line? Because at the end of the day, the name of the game is green. So you want to make sure that the company is healthy by recommending and really taking a look at their cash flow, their bottom line. Not necessarily. You don't have to know exactly what's going on with a company in the next few months or the next few years. As a trader, you're just concerned about what's happening right now in today's price. You're just looking about where is the price action could be today and where could it be at the end of the week or maybe where it could be at the end of the month and take advantage of that move, whether that be down or up.
So we cannot talk about investing without risk, right?
Of course.
What strategies do you use to evaluate risk or manage risk? risk?
So the first thing that I always recommend when we talk about risking any type of money in the stock market is first and foremost making sure that you have your home taken care of. What do I mean by that? Make sure that you have money set aside, to take care of your bills, especially if you're thinking about doing this thing full time. Make sure your home is get 6 to 8 months of your monthly income stored. So in the event that things don't work out in your trading or your investing, first and foremost, you got something to cover you, right? Next, you're talking about your risk evaluation really comes down to the type of person that you are, right? You don't want to go ahead and say, I'm just going to throw this money in here and whatever happens, happens. You want to have, before you even get into a trade, before you even get into an investment, you have to have a preconceived number in your head to say, all right, if this product gives me a loss of 500, I'm going to get out no matter what. The biggest part of trading is getting rid of that emotional aspect of trading about losing or gaining money. You got to trade like how hedge funds algorithm trade, without emotion. This is my loss, this is my profit, and stick to it no matter what.
In terms of risk, right, you have a preconceived number in your mind.
That's right.
But if it goes down to $500, you're getting out.
Most
but
definitely.
The reverse, though, right? You have a preconceived number in your head, in your mind.
Yes.
But the reverse happens. We're going up.
Yes.
What do?
You also have to have a preconceived notion with that as well, right? You have to go ahead and you have to say, listen, from experience, a lot of times that side of things you'll learn from experience, right? If you realize that the market tends to go in your favor more than you anticipated, you have to then say, okay, if it goes up for a certain amount of money, I'm going to take this money no matter what. But you still got to give it enough space to wiggle around for it to continue to give money in the event that you're wrong in your target and it gives you more money. So you have to have a preconceived notion there as well. But you also have to be able to know when to take money, because at the end of the day, the money is not made until you sell the product.
That's right. Before I got into trading and investing, I was more familiar with a bullish market, right, than bearish.
Yes.
The idea of making money from a bearish market was unclear. So what you'll find is that many people will hold on to their losers until the market turns around. How can an investor make money when the market's going down? Also, what do we mean by bearish and bullish?
So bullish and bearish is terms used to represent the direction of the market. So when we talk about a bullish market, it means that the market is going from lower prices to higher prices. And when we're talking about bearish, we're talking about going from higher prices to lower prices. Now, there's a reason why many people are more familiar with the bullish market, because essentially a lot of people are connected to the stock market through things called retirement funds, your Roth IRAs, your traditional IRAs. So we are programmed to say, all right, put your money through something called dollar cost averaging, put your money into a retirement account, and in the next 35 years, the market will go in your favor. And because the terminology in the market is you don't short America. So the stock market also has a track record that over the last 100 plus years, it's only gone up. So it is, when you're talking about investing and you're talking about it from a bullish market perspective, it is a sound plan, but it's not suited for every situation. So you can make money going on the downside, right? Because a lot of people don't tell you that. Hedge fund managers don't necessarily tell you that, because they make money on you sending money their way, and they have a rate that they attach to that, and they manage your account for you among millions of other people.
I mean to interrupt, but just for the sake of my listener, when we say downside is another
term. Yes.
For
a bearish market or selling in the market, going from higher to lower prices. But you can protect yourself in a downside market or a bearish market, right? You could either decide to do one of two things. You could park your money aside and make money on it going down by utilizing shorting, which is making money on the direction of going down, or you can buy puts in order to go ahead and also make money going down, or you can not touch your position, right, your investment position, and maybe purchase some puts in order to protect the amount of money that is taken away from your initial investment, so that therefore it's not as big of an impact on the downside compared to going on the upside. So if you have $100,000 in a bullish market and you may be able to protect with puts maybe $25,000, your market value would only go down, if in a 50% drawback, it may only go down to $75,000 rather than taking $50,000 of a loss. So it helps you to build faster if you know how to protect your investment in all market conditions.
When we we're talking about puts, of course, we're talking about options. Right?
That is correct. We are talking about options.
In terms of buying and selling, how much is enough? How do you know when to get out of a trade? I know you mentioned, alluded to it a little bit earlier, but can you speak a little bit more?
Well, you can have your rules associated with it. So I know many traders or many investors that says if I get into this trade and the return it gives me is 20, 25, 30, 45%, I'm getting out no matter what. Right? Because once again, like I mentioned, the money is made once you sell the product. So you do want to have that. If whatever money, it all depends on what you, and I think that's what a lot of people get a misconception of, is that trading has a lot to do with you and your personal connection and your personal understanding of money. So what $600 might not be a lot to a lot of people, but it might be a lot to someone else. So it's all about your perspective of what you're looking for. But you must have a realistic view. You're not going to go ahead and make $100,000 in one day, although that can happen. But you got to keep it realistic at all times.
Education. As far as personal growth, how do you develop yourself and how do you keep up with the ever-changing financial markets?
I love this question because many times people ask me, being that I'm in that realm of business, many people ask me, even before they come on to take the courses, they ask me, what books should I read in order to be a better trader? And a lot of people expect me to say, read this book about trading or trading mindset or trading in the zone. Many people expect me to say that, but and I don't know if they're happy or not about the answer that I give, but I can only talk from my experience. The books that I tend to read is personal growth books, Power of Habit, understanding yourself and your connection with money, because what you're going to realize is that trading, aside from the fundamentals of learning how to trade, is a very mental game. Everything that you're going to talk about, executing your risk management, understanding, getting rid of your emotions in the process of trading or even investing, you realize that it really tests your emotions when it comes to money. So I always talk about personal growth. What you're going to learn if you're thinking about going on and becoming a trader, becoming an investor, that you're going to really realize that with personal growth comes betterment of trading style. Right? It becomes better. You're going to realize that you've become more consistent, because at many times the stock market is not doing a lot. So you need to be able to have that kind of fortitude to say, listen, I'm not going to trade today. I'm going to go ahead and I'm going to stay out the market today and trade another day, live to fight another day. So it really does come down to your emotional well-being, your self-mastery, and your self-discipline.
That's interesting too, because I remember this guy, Peter Lynch, right, a famous investor. He said, if you can get through a 5th grade math curriculum, you can succeed on the stock market. Based on your investment strategy, is trading / investment for everyone?
I'm gonna give it a little alternative there, right? I'm gonna give a little spin on it. I believe, yes, it's not anything complicated. A lot of people believe, well, if you're good at the stock market, you got to be good at math. No, if you could add that 2 + 2 is 4, you can go ahead and you can get involved in the stock market. Is it for everyone? I would say yes, it's for everyone, but sometimes it's not for everyone right now. Meaning that if you are not able to control yourself in terms of if you can't get rid of that need for wanting to get the money, because some people come into this thing and say, listen, I need to make this money, I need to need. You're gonna sink your ship with that type of mentality. It has to be something where you're like, listen, I'm doing this, I'm focused on the process, not on the money. And if you can't get past that part, or you haven't mastered that part of yourself first, you must first do so before you even think about going ahead and starting the market. That's before education. That's before everything. Master yourself first, because no amount of education is going to help you unless you've mastered yourself in terms of your relationship with money.
And of course, you teach that in your course.
Of course.
All right. For those who want to learn more about investing and trading, what's the best way to reach you for coaching?
The best way to reach me is through my email or Instagram. My email address is lionshearttrading with 1T @gmail.com. And then you have Lions Heart Trading on Instagram and on Facebook with 2 T's in between heart and trading.